Hey guys, it's Apex Trades, Andrew from Apex Trades rather. I want to follow on from the previous session, but this time more focused on risk management and the importance of risk management. If you're anything like me, I used to use DCA really as my risk management method of choice, and I think over time it's probably one of the things I've neglected most is the risk management. I've always been good with TA. I've always been understood reading the market flow and understanding how, where I anticipate price to go. But sometimes when you get that wrong, rather than just stopping out and doing the normal thing of risk management and taking a loss, I used to DCA, and then that DCA would become orders of magnitude, and then you'd lose an account. But even that didn't stop me, because it's easy with Apex, right? You just buy another account. There's always loads of discount codes, blah, blah, blah. But actually, since the rule change was implemented, it's definitely made me a better trader. Definitely made me more. I think it's filled the gap from the side of my trading that was always a big issue. And so today, following on from yesterday, the previous session, we're going to do the same again. We're going to review the data. This is a perfect one to show why risk management is important, and how even with a lot of losses, you can still make gains, right? If your losses are small. So that's what we're going to do. We're going to dive in to the charts, and we're going to go through it just like we would do with anything else. So let us switch views and let's go through that. So I'm sick, by the way. I'm full of cold, flu, or whatever else. So I sound like well, I don't sound great, let's put it that way. So as you normally know, quick recap, I like to wait for a liquidity session high or a session low to be taken. But I'm also interested in daily highs, previous day lows. The other thing as well that's important is pivot points. So R1, S1, R2, S2, the actual pivot itself. And so always cognizant of the fact that whenever you open your charts, looking at those zones and those areas, I'm not so much focused too much on internal liquidity like fair value gaps, order blocks. They're important, I guess, if you're ICT or you're a student of ICT, but ultimately I'm not too much focused on that. I'm only trading the day, right? So I'm only really interested in what goes on in the day. So for transparency, we have previous day high here, previous day low. We have S1, which is this line here, if you can see it in red, and that's the previous day low just below that. And you have the previous day high in green here, and then this is S1, that is R1 in red above there. I've marked this horizontal line as 10 a.m. So let's just go through what I normally go through. I'm really only interested in taking a trade once we get to this point, and then we'll go from there. Okay, let's just give a bit more expansion to the charts and the candles as we float this out a bit. So let's just get to 10x speed and let's hit the play button. So let it do its thing. That was a lovely one, by the way, second standard deviation, but the problem is we haven't taken any range high or low yet, because Asia and London are still effectively trading, right? Let's slow this down once we get past 10. Okay, so let's see what's happened. So straight away, 6 minutes into Asia close, right, we get this big candle, second standard deviation. I'm not interested in taking a trade. Yes, we have taken the low. I want to see you take a deeper rejection into that third standard deviation. Right now, we'll go candle by candle, and let's see how it plays out. So now it would be easy, by the way, right, seeing this, to dive in here. But we don't. We're waiting for that third standard deviation to get tagged. Okay, so third standard deviation get tagged. So, of course, we're going to take a trade, right? Cognizant of the fact, though, that we have lower liquidity targets. Even though we've taken Asia's low, there may not have been enough liquidity generated in that session for whatever move needs to be propelled to go to the upside. So you've always got to remember that risk in the context of the market. But for now, let's take the trade, right? So because volume's increasing. I'm only going to use one contract. So let's hit buy. We're going to use a $200 stop loss in this instance. And for a TP, all we're going to do is we're going to trail a candle or two candles, depending on how we feel at the time. If we're nervous, right? Once price rejects or, you know, goes the opposite way. So let's hit the next candle. Okay, so our first trade was taken out. So we are 265 in the pocket. Or out of pocket, rather. Right? But because of this sell-off is getting a little bit aggressive, we're going to sit a little bit on the sidelines and just see how things move a little bit. Big deep rejection, big deep pull down. If you notice, right, and this is an experience thing, there's no rejection on that candle other than a small part there. So would I take a trade here? I mean, I could quite happily take a trade, but if that wick was a lot higher, then that would give me better feeling. So let's not take a trade here. Would I be willing to take a trade now? No, there's no engulfing candle, nothing that's giving me the idea that this particular move is ready to reverse yet. Now I'd feel I'd missed a move, right? Because price now does look like it's trapped these sellers here. So now I'm thinking, damn, $265 down. And I've also missed a move. My own fault. It is what it is. Or was it more of a trap to the upside? Look unlikely, yeah. So let's continue. Okay. So now I'd be nervous now if I was the one in the buying position here. I would take a trade. I still wouldn't take a trade here. Again, there's absolutely no, that candle is finished without any wick or anything that gives me the sense that this is an opportunity, right? So let's continue to play. Same again, right? It's a little small rejection at that third standard deviation. There feels like there's a lot of selling power here. So we're just waiting. Okay, now we had a wick, right? I would be interested in taking this move because there's a little bit of indecision, right? And this is why I would always say nothing prepares you for trading, like reading charts day after day, minute after minute, sitting in front of the charts and seeing what's going on candle by candle and making an assessment. Like you can clearly see the selling strength is heavy. This is the first indication at this level where we see a little bit of a move up. So okay, let's just chance it and take a buy, right? Same again, $200 stop loss. Ultimately, what we're waiting for is the bigger move to the upside, right? And we don't know when that's going to come, but we're happy to take, not happy, but we'll take a loss if we have to, right? So let's go next candle again. Another loss. But this is the point, right? This is why it's really important that you don't lose your head at this point. Okay, we're 505 in the hole now for the day. And now look, we can see that we've got targets down here, which for me now I'd be thinking, okay, there's a high potential that this is where we are going to go in terms of the move. So let's crack on. I would take a buy now. I'm doing this more for example, right? But if it loses, that's fine. It is what it is. This is all about showing how important risk management is in your trading over, you know, trying to catch, well, we are trying to catch a big win, but equally it's important to show how mentality, and it's easy, we're going back in time, I get that, but this is as close to reality as what it would be, right? To not lose your head. What are we now? 785 in the hole. Another wrong decision. Let's go next. Now it's getting really strong, right? But we don't see any weakness in any of these candles yet, apart from that one there. Now we do see a nice, so I would get in here, right? Again, another buy. Stop loss $200. And we're going to go next. Okay, now we can bring to break even. Next. Okay, now we can start to fade and trail. Okay, let's bring that up to there. Let's bring that up to here. Okay, let's go up to here. So we've got 245 clawed back, guaranteed. 275. Okay, so we're now down only 580. But for us, like, we're still in that zone where we still think potentially the lower targets could be hit. However, we've taken a small scalp that's reduced our deficit a little bit, right? And we got really tight there because I'm still not convinced that we're down. You know, we're not. You've got to remember, if markets are going to move, they're moving with intent and purpose. They're going for a specific area right now. Without knowing what's left right now, there could be some sort of internal liquidity zone or whatever else. But it's not. They're not the bigger. They're not the bigger fueled moves, right? It's normally previous day lows, session lows, specifically on London or Asia if there's been a lot of liquidity generated. And pivot points are just natural zones, right? So let's continue next. Okay, price. This might be a pullback for a push to the upside. Okay, not likely. But it is seeing some level of support. But the sellers are still really wanting to push forward, right? Okay. My mind here right now, I'd be thinking, right, you've seen a lot of wicks and a lot of rejections here. And we came out and took that low with a big bounce, right? I would get in on a trade here. The way I would do it, right? Only because we've taken out that low, we've had a bit of a bounce. And we've seen a big rejection. Right, and I'm a scalper, right? So I'm interested, but I'm still also cognizant of the fact that these are the liquidity zones. But in my mind, I'm thinking to myself, right, well, if I take a loss, I'm going to take a $200 loss. I know at some point we'll recover all of this. I would expect at least we would recover this, right? And if I get a big loss day and I take a hit on $1,000 loss for the day, I'll take $1,000 loss, right? It's part of the game. It's your cost of service, right? That's losses are losses. It's as simple as it gets. So, you know, I'm gonna say buy. Let's go. What are we gonna do? Stop loss $200. There. TP we're gonna fade. So let's go next. Okay, I would probably want to at least break even just to cover that move. Okay, start to fade. Beautiful. Next one. Okay, now that we look like we're starting to make a move up, I'm gonna fade 2 candles now because I don't want to get wicked out. If I get wicked out, it is what it is. But at this stage, at least, I'm giving myself a little bit more breathing space. So 1, 2 candles, right? So 1, 2. I'm going to move this up to here. Taken out. But now we're only down to 205. Okay. So without losing our head, taking many paper cuts on the way down. We're not quite at parity, but we are still at a position where we're seeing some level of gains getting equalized. Okay, so lower low, right? But now this is still a lower low, but this could just be a deviation of this. So we're just going to sit and wait. Let's see what price does. Looks like it's going higher. Okay, starting to come back down. Let's forward this on a little bit because now, okay, we had a big jump down there. Okay. Do we get a bounce at the second standard deviation? No. Okay, so we are very close to R1 and we are close to previous day low. So I would take a trade if we break R1, and I would probably have a stop just below previous day low. If it continued down, I would go in again, right? It's getting very close. Perfect. Okay, so we're going to buy there because that is a nice zone. But what I like about this particular candle is that rejection right after the pivot, R1. Stop loss will be below, so let's do the $200. Okay, and let's go next. You know what we're anticipating is a nice move up, right? We think, yeah, this is now the New York's kill zone, right, where we expect a liquidity injection to come in. We've just taken R1. So now the mindset changes a little bit now, right? Because the mindset's now thinking, okay, now we've taken a significant liquidity pool and we're seeing a big move. So now rather than just fade it by 2 candles, I want to see some clear structure. I want to see that we, you know, start to clear the highs here and then make a low and then start to drive and do it based on structure rather than just 2 candles, right? So let's keep going. I would at least probably bring it to break even. No, that's a fair assessment, right? Okay. Could have been dangerous. If we break the high here, then that's a nice structural low I would bring my TP to. Okay. Happy with that. So now what we want to see is, do we break this high here and then create a new structural low for us to fade our TP? Just move this forward a little bit. Okay, this could, if we break this high, then that's going to be our structural low. Okay, new structural low, so it's going to be here, but we need to see is take this high here. Okay, perfect. Let's drive this to here. Theoretically, that's our new structural low. But it wasn't a nice enough move. I'm still going to stick it here, right? Just for now. I want to see us break a new high. If we break a new high, I'd be happy to take that. Let's just move this along a little bit. Okay, we're just making a new high. So now I'm happy to bring this to the structural low there. And you can already see, you know, so we were 205 down from taking a number of losses to start with. But now we're 1420 up. Now, to be completely honest, because of the consistency rule in Apex, I'd probably take that. I'd probably just take that win and be done with it. But for the exercise of seeing what, you know, can happen, just using good risk management and structure, we are approaching VWAP, of course, but, you know, let's just continue. Okay, we made a new structural high. That brings that to there. That gets us a guaranteed $1,000. So now we want to see a move down and another structural low created. Perfect. Drive this up to VWAP. So now we've guaranteed ourselves $1,500. Do we get another structural low? We could get tapped out here. Wow. Okay. So here's the conundrum now, right? We're approaching the second standard deviation here, and I don't want to lose out on too many profits. So I'm going to bring my structural low to here now, right, where we have the least little bit of support here, right? And then we could get stopped out. Okay, so stopped out there from an entry that was from here. Right, now the reality as we review that, okay, so our trading style is we're trying to take a move, waiting for that bounce off of the third standard deviation. Now you may say, well, actually, why not just wait until, you know, we take this liquidity down here? Well, you don't know that at the time, do you? You don't know. We will never know where the market's real intention is to go. The only thing what we can do is not be erratic, not try and hold on to a losing trade. I mean, if I were to place the trade there and then DCA'd and DCA'd and DCA'd and DCA'd, I'm underwater by now, right? And that's the whole point about this, is to understand that actually taking losses early, if your thesis is wrong, is absolutely part of the game, and that's not a problem. And you've just seen us take, you know, a number of losses. And by the way, these weren't all losses, right? So some of them were couple of losses here, then a little one win, and then another couple of losses, while the trend just really wants to push itself down. But the trend doesn't go on forever, right? I mean, we took a nice little win here, which brought us back up to around $200 in deficit. Then we waited patiently, because this is no man's land for us. We're not taking a trade there. Then we trade from here. It's a beautiful move based off of support 1, and then we just rolled it all the way up, right, and got out here. And so that's the whole point of this video. It wasn't to, you know, my profits for this day across 5 accounts was $1,400, right? That's what I did across my 5 250k PAs. This was to illustrate non-perfect trading, but perfect in the outcome, based upon the fact that it was very systematic in the approach. It's okay to be wrong on a trade, as long as your mindset is still correct. I.e., I know we're having a sell-off now, but I expect that we're going to bounce, and when we do, we'll hit it hard. So hopefully you enjoyed that one. Do let me know if there's anything you would like me to cover in more detail specifically. I share my P&L and everything in the Discord server. Discord link is somewhere in the description. Like, subscribe, follow, share.